please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Edelweiss has written a report on India's business services sector, and they believe that it is a multi-year opportunity and growth in the sector will remain accelerated for the next 6 to 7 years. To discuss this report, which is a very thick booklet, I must say, we have Aditya Narain, the head of research at Edelweiss, and Alok Deshpande, who is the author of this report, joining in to discuss it. Thanks, gentlemen, for joining in. Aditya, let me start with you. Why the services sector? What is the kind of potential you see?
You know, if you really look at the overall India space, I think services is a very, very large part of the economy. And so far, it's tended to be kind of less organized. And this is really the first quantum shift that you're seeing into companies which are purely on the services space. And now that they've got a certain amount of scale and I think the competitive dynamics have effectively changed, we really thought this was a good time to do a really deep dive in this space. Additionally, of course, some of these companies have listed only recently, so that's where the opportunity has effectively come in. But this is really a very, very significant market space, both in terms of how it's likely to grow, and I think, you know, in terms of the stock opportunity that it tends to provide.
So, Alok, coming to you on this, services sector, define it for us, and which are the stocks that you've covered through your report?
Sure. So we have covered two segments in this report. So the first one is private security services, and the second one is flexi staffing or temporary staffing, as it is called. The first thing which will strike most investors is the sheer size what these markets already are at. You know, so these are both $10 billion plus markets already. And the stocks that we have sort of covered in this report is SIS within private security services and TeamLease and Quest in flexi staffing. So these are all three are really good ideas in these in this space.
So could you just tell us what is the market opportunity, overall market opportunity? Because this is a space where, I mean, what is the organized, unorganized split, etc.? Just some details. Sure.
So the market size, like I said, you know, both these segments are $10 billion plus in size already, and they have clocked about 18 to 20% CAGR over the past decade. We feel that this kind of pace is very likely to continue over the next 7 or 8 years as well. So by 2024 or 2025, our estimates is these market sizes can actually triple in size. So we're looking at sizes which are north of $30 billion. These are very big opportunity sizes there. And a large part of it is unorganized as well. So the players who are already established, bigger players, have a big opportunity to sort of become bigger as well.
Which is the largest player? I mean, is the largest player listed in both these areas?
So SIS is the second largest player, but we feel that is going to be the largest player in a year's time. And the Quest and TeamLease, which are the stocks in flexi staffing, they are already the first and second player.
Okay.
Yeah.
Alok, generally in cases like this, in services cases, there's obviously much more competition which crops up. Yeah. In that context, what kind of margins are these companies currently working with, and what are you envisaging as well?
Right, these the margins for these companies are anywhere between 3 to 6% on the EBITDA level. But what you need to understand is it's a very asset-light model, right? So there's no capex as such in these businesses. And what happens is the larger you are, it gives you a exponential sort of advantage to compete with the smaller players, which are not able to scale up their businesses that well. So the competitive advantage are very huge if you're a big player already.
So I think what is very telling about this space is that the larger you get, the more entrenched you get. Not only do your economics tend to improve, but from a market acceptance and a market ask, this is where a lot of the business tends to go. It's like the larger getting, the bigger getting larger. You've seen that across a lot of the services businesses. You look at the IT space, it's the biggest who have actually thrived. It's not the smaller ones. And given that a large part of this market is actually unorganized, that space will keep tending to, it's not as well go away, but the growth is really going to come in amongst the larger players, the more organized ones.
I mean, markets right there, no real big change. Look at Jet, which is cracking. It's down about 9%, 539. And of course, the big one was Indigo, which continues to be under pressure. Did see a bit of recovery, but I think it sold off again. We've been discussing an interesting report with Edelweiss's Aditya Narain and Alok Deshpande. This is India's business services, a multi-year opportunity, and they're basically talking about 3 stocks primarily as their top ideas. So TeamLease, Quest and SIS are the 3 names which we were discussing before we took that break. Aditya, just a quick point. I mean, as policing, for example, gets better, and hopefully it will get better, is that a challenge? I mean, some of the end user industries, banking. I mean, people are not, banks are not coming up with new branches, right? I mean, it's all digital. So is that a...
So I think there are two parts to it, right? There will inevitably be a technology component that will keep riding on this, right? The point firstly is that these companies are part of that in any case, right? It's not as if they do only the human police role. They also manage the technology, and they manage the screen, and they manage the camera.
But so I think IT companies for that, right? I mean, what is the...
Well, typically, no, not for security services. The IT companies will potentially provide you the hardware, but the management of it will still remain with security services. So I think one part is that they're going to ride along with that. The second part is, I don't think you're going to have growth only in one segment. I think there's a huge part of the market, particularly tier 2, tier 3, where there is, a distinct amount of human intervention that is effectively needed. So I think that bit will continue to happen. And the third thing is clearly market share gains for the biggest guys, right? It's, as you said, it's like a $10 billion market in any case. The market will grow, but on top of it, we tend to believe it's the biggest and the best organized who will actually take a disproportionate share of it. So I think to that extent, growth rates for the larger players can be even more significant.
I mean, basically you're saying that with most things in India, the numbers are just so large that even with maybe things going digital or need for guarding, etc., going down, it won't really make a difference in the biggest.
I think that's one point, but I think they ride the share of shift to digital. They are the guys who are going to manage it. They are not only about providing, armed guards or non-armed guards. They're about covering the entire security services. That will include any and everything that shifts to the technology side of it.
Okay. Aditya, we have very little time left for this interview, so I just wanted to get in a question on the markets, especially today. On a day like today, we have Interglobe down, we have HCC, which is declining. Is there some formidable or different kind of pressure that we're seeing in the mid-caps now?
See, I think if you see the market, and that's what we've been saying for a while, that the micro is beginning to look better, the macro is getting more challenging, and it's a year that you're going to effectively see a fair amount of volatility. What tends to happen when you're expecting volatility from a top-down perspective, then the bottom-up volatility that you see in individual stocks, either for bad results or for corporate governance issues or a lack of knowledge, right? Those tend to get very exaggerated also. And I think that is what you're tending to see. Do note and do remember this market has come back very, very sharply over the last 1 month. But I think when we talk about, volatility, you talk about it at the market level, I think it tends to get a little bit more exaggerated at the stock level, and that's what you see whenever events or events effectively happen, or results which are good or bad tend to play out. So I think you will see this year is going to be characterized by a little bit of this. I don't think we should get too caught up with what's happening on a day-to-day basis, because this is what is the day-to-day is going to be a little bit more like this.